what do you make of this range we seem to be in, whether we're poised for a breakout in either direction in the near term?
Yeah, I mean, if you look at the kind of post-election cycle, it's a little interesting. It seems as though a lot of individuals, myself included, were anticipating a little bit of a buy the rumor, sell the news type event. Obviously, with the markets leading up to the election, seemingly perfectly pricing in, obviously, both the outcome and what a Trump win would entail from really much more regulatory certainty. We're already seeing it. We're seeing changes to really the SEC landscape. We're seeing changes to Congress and legislation with regards to how we're going to really establish clear-cut frameworks. We're seeing a tremendous amount of support and adoption for crypto at both the enterprise and legislative level, obviously with some of the ETF approvals and flows we've seen there. I think the market, is generally reacting in a choppy fashion right now. There's obviously still some time to go. There's still a lot of hurdles to get through. Very cautiously optimistic within these price ranges. And I think obviously, in the short term, what it'll really take to see a significant breakthrough past these levels is really the broader market thesis actually playing out and being executed on, establishing clear-cut frameworks, seeing legislation pass through, and seeing some of that more institutionalized adoption pan out. Look at MicroStrategy. It's pricing obviously to perfection, trading at multiples of a premium over its book value of Bitcoin itself. So there's still some choppiness and frothiness out there, but I think time will tell, obviously, and as things pan out, the market will continue to price things properly. I'm obviously very, very, very bullish, medium term and long term.
Yeah, you brought up something there about institutional adoption, and I was wondering how much of the price action we're seeing right now is driven by institutions. We long talked about how after FTX, retail investors were sort of skittish around crypto. Institutions were still questioning whether they were going to get in, and now after Bitcoin ETFs, especially, you have a lot of buying on the institutional side. But are you seeing any signs that retail investors are driving some of the action we saw post-election, or is it all about institutions right now?
Well, if you look back into November, right, I mean, that was just, groundbreaking, almost $8 billion of net inflows in a single month to Bitcoin and Ethereum ETFs, right? And I think obviously, the post-election momentum is really driving that adoption. And, you're seeing very, very, very steady growth month over month, really trailing back to the start of this year. This obviously suggests much more of kind of a maturing market overall in terms of, it's really kind of a change in the tide in terms of this constant institutional flow. Keep in mind, though, typically when we've looked at cycles and where the retail investor comes into play is really the bull market cycle of inflows away from Bitcoin and Ethereum and into a lot of the more altcoins. We're seeing it with Ripple. We're seeing it with a bunch of coins on the market, from Hedera to Avalanche, whatever it might be. So I think it's kind of a twofold effect. Obviously the institutional inflows that lead to some of the price ascension of the top blue chips, Bitcoin and Ethereum, kind of set the path for a lot of this altcoin bull market run overall from retail players and institutional players alike.
You talk about altcoins. I think the other thing that comes to mind for a lot of people who are on the retail side and maybe crypto curious are these meme coins. We saw a spike in Dogecoin after the idea of the Department of Government Efficiency, Elon Musk being involved. Does this cycle feel different when it comes to meme coins? Because when you go back to 2021, there was a lot of hype around less about utility and more around FOMO. Does it feel the same way this time around, given the rush into these tokens just around news related to politics or whatever else and less about utility?
I have had multiple people this cycle tell me that the first crypto coin that they ever bought was Dogecoin, several weeks ago. It does feel a little different, but it's the same in a lot of ways, right? You had obviously, back in 2017, a rush into ICOs. Obviously 2021, rush into NFTs and a variety of different projects. And, now the meme coin craze has always been there. It's just heightened at these levels. And when you see obviously these overnight successes, and let's be clear, right? There are hundreds of thousands of meme coins out there, right? Different smart contracts and different tokens that have been launched, and only a few have really seen success. But just keep in mind one thing, with meme coins overall, and most of them advertise it. If you go to like literally, memecoin.com or whatever, they market. There's no utility. There's no intrinsic value. This token's not worth, potentially anything, right? So when you're talking about meme coins, it's the really most kind of perfect on-ramp for non-crypto natives that may have some skepticism on crypto overall, but want to onboard and learn about the space a little bit more. If a token doesn't have any quote unquote fundamental utility around it, then you can look at price in one of two ways. It's either nothing or it's infinity, right? You don't have necessarily the utility of, let's say, Ethereum that's generating gas fees or has DApp growth on the platform, and you can back into some sort of underlying token value based on discounted analyses with regards to what the economic rent might be associated from fees and things like that. When that doesn't exist in the meme coin market, right, the expectation is infinite, and so you have a lot of this speculative FOMO into these tokens. Obviously, it can be very, very dangerous, and you could lose effectively everything. But at the same time, it's easy for people to understand and to conceptualize. There's a lot of social proof around meme coins, and really a lot of kind of community hacking that goes into those things. I personally don't participate in meme coins whatsoever, but I do understand their importance and why they have a place in this market. And more than anything, I do see it as overall positive engagement in terms of onboarding new community members.
I'm wondering, one of the critiques from people who were crypto curious and then maybe took on a negative view of crypto in the last cycle was the volatility that came with a lot of the swings we saw in the collapse of FTX and the collapse and rug pulls of some tokens. That seems like that might be a risk again, potentially, if we're seeing a rush into meme coins that, to your point, can go to infinity or can go to nothing. Is that as much of a concern, that volatility that people were trying to get rid of after the last cycle? Are you worried about that at all?
Most people look at volatility as a risk. It really depends on what your perspective is. Volatility to a lot of institutional investors is a feature of crypto itself. And there is obviously a number of positive benefits in having high vol. But to be clear, the broader crypto ecosystem, the volatility has certainly stabilized. Yes, you do have some of these intensified meme coin movements overall. But again, I think that people understand that vol, and that's actually most likely why they're interested in participating in meme coin. How can we maximize and over leverage the underlying beta on this market? And so that's really what meme coins can offer to a lot of individuals. Frankly speaking, though, if you look at some of the more fundamental tokens, Bitcoin, Ethereum, we just talked about pretty tight bands in terms of pricing ranges over the last several months. These digital assets aren't any more volatile than some of the top tech stocks we see, Supermicro or Nvidia, Rocket Labs, for example, and then even certain nation state currencies, whether you're in Venezuela or Zimbabwe or wherever it might be. So volatility is all relative as well. But I think the most important thing to understand is that it's being captured as a feature right now and not necessarily seen as a risk.
Got it. Last time you and I spoke, we talked about Ethereum ETFs and whether you thought that they would get approved, and you were skeptical at the time. Obviously, we've seen those come through. Fast forward to now, the adoption hasn't really been the same as Bitcoin ETFs. But what's your take on the adoption of Ethereum ETFs, whether you're happy with the adoption of those, whether you think that those are going anywhere, especially when Bitcoin seems to be getting all the attention from institutions right now?
Yeah, listen, I'm the first one to say it. I was completely wrong about that, the Ethereum ETF approval. I'm shocked by it, but I'm stoked that I was wrong about it. I'm very, very excited that did happen. If you look back, obviously my framework and mindset was really predicated around this idea that Ethereum post-merge was somewhat of a captured network. It still is. SEC has been very, very, very highly scrutinizing just with regards to Ethereum being more akin to a security that's, not necessarily fully decentralized by any means. There are a few really key validator groups out there that effectively quasi-control the network in a duopolist way. Whether the industry wants to recognize that or not, that's really the case. Ethereum is a captured network, but it doesn't seem as though the market minds that, at least not now. And I'm excited for the broader adoption, because I think Ethereum is it represents, obviously, one of the most important sides of crypto, right? You have one side, the Bitcoin, the digital gold, the digital commodity, the store of value. Then the other side, you have really the true Web3, which is Ethereum at its core, enterprise level applications, true token economies. And so it's exciting to obviously see the interest and adoption and people learning more about what Ethereum could really offer, particularly in the context of a broader Web3 token economy.
Yeah. I want to ask you about that regulation point, because it was a big point of contention when we talked about Ethereum ETFs last time you were on. There was a question around whether the SEC would approve something like an Ethereum ETF, because they were unclear as to whether Ether itself was a security or not. Now, obviously, a lot has changed since we spoke back in April. We had the election. Trump is headed to the White House in January. It looks like regulation is going to look quite a lot different come 2025. So is regulation less of a headwind now? And what does it look like in terms of a tailwind in 2025 if it is going to drive prices higher?
So regulation, it was more of the lack thereof that was the headwind. And now the really kind of unanimous desire and interest to put that framework in place is the true tailwind. And I think that's one of the biggest things that individuals really need to discern about this market and about what's happening. It's not that, hey, there's going to be free reign on crypto and you can do whatever you want. No, by no means. But what's now happening is that there is going to be very clear-cut legislation in place, or, knock on wood, we hope there will be, with this new, obviously, White House and Congress in place here. And that understanding that crypto is here to stay, and we're going to find how to insert it into, obviously, our society and economy in the most practical way possible, is the tailwind. That we are going to have clear regulatory frameworks and guidelines, so that if you're a local coffee shop, you know that you can accept Bitcoin as currency, and this is how it's going to be treated by the IRS, and this is how it's going to be posted on my balance sheet, etc.
Just to cap off this point, we just found out this week that Donald Trump, President-elect Trump, is going to nominate Paul Atkins to be SEC chair. Atkins works for a consulting firm for compliance. He has a small number of crypto clients at that firm. I'm just wondering how you're feeling about President-elect Trump being this pro-crypto candidate that he promised on the campaign trail, and how that's translating into this incoming administration. But I guess my key question to that is whether the crypto market has properly priced in just how much different this administration will be compared to the Biden administration.
Mm-hmm. Mm-hmm. Yeah, I mean, listen, the biggest thing is, Trump has been pushing for an easier path for, Bitcoin and crypto. And, it's not necessarily around the, pro deregulation stance. It's more of the pro friendly regulation stance overall. And if you look at, obviously, Atkins, who served as the commissioner back under George Bush, you've seen obviously a lot of what he's done overall. Right, he was very much so critical against Dodd-Frank, how burdensome it was on the banking industry, and the idea in place is that he's going to have kind of a similar mindset just with regards to how we think through some of the existing bans or frameworks in place that make it very difficult and encumbering for crypto companies to come into the market, and potentially ease that approach overall. So, obviously, he hasn't necessarily been outwardly vocal, Atkins that is, specifically with regards to what he wants to do with crypto overall. But if you look at his track record and how he's viewed, obviously, the banking industry and the financial services industry historically, and you take in place, obviously, what Trump has guided he wants to do with crypto, you can kind of put two and two together and get a feel for what we might expect here.